That way later, if we need to review or yeah, review basically, we can do that. Okay, but anyway, so let me start with the official slide here. And welcome to the session today, my friends. 14th of November 2018. Welcome to the Get Together session. We're going to talk about alien today. We're going to talk about UFOs, and obviously using a little bit of humor, even though this is a very serious matter because we are talking about trading the financial markets. So we'll talk more about what UFO means and what this app does, etc., etc. Okay, but very quick, let's talk about the least exciting part of this session, which is when I read the disclaimer for you, which is something needed, but I'll do it quick. So disclaimers: the following videos, clips, and demonstrations are for educational purposes and instructional purposes only. Traditive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through the demonstration do not indicate in any way the results you may receive on using our products. Okay, so that's it. We just comply with certain pieces of regulation here by reading the disclaimer. But now let's go ahead and talk about the app. Okay, and guys, I will be reading on your chat box in a minute. If that's okay, let me first kind of introduce you to what it is, because I think that the easier way to start is to talk about what it is, what does it do, and how does it work, and all those things. And then I can take your questions and so on. And we didn't have a predefined ending date for the session in my mind. If we were to be able to go over everything you guys need in 1 hour, it would be great. But I am also certainly happy to extend this to double the time if that's needed. Okay, so I'm not in a rush. I just want to make sure I take all your questions. But before I take your questions, I think it would be better that I explain what it is, because probably as I explain it, your questions get kind of answered naturally, or maybe you have new questions of things you haven't thought about. Okay, so what is AutoUFOs? Well, AutoUFOs is an app. Is an app that currently runs in TradeStation. So it's a piece of technology. It's just just like traders, we use trading platforms. Just like traders, we use computers. Just like traders, we use all sorts of pieces of technology. So AutoUFO is one more piece of technology that has very specific purposes, and that could be used in many different ways, like all pieces of technologies, like all tools. The key is to use the tools in the right way, so that way we don't get in trouble, right? We need to understand the purpose of the tool, how to use it, and from there, that's when the tool provides an advantage. Okay, so I can see that Doug, Peter, and London Trader just joined us. How are you guys? And probably you have your microphones on. If you could mute your microphone using the microphone icon in the bottom left, just click on that icon until it's red color. Thank you so much, guys. So what I was saying is that AutoUFOs is a tool. That's what it is. It's a tool, and we need to understand what does it do and how to use it. That's basically the message I was sharing with you. I still have someone with a microphone still on. Guys, if that's okay, please mute your microphones. Everybody, look at your microphones and please mute your microphones, guys. So I'll continue. Okay, and so what does this tool do? Well, this tool is trying to identify unfilled orders in the market. That's why the tool is known as AutoUFOs. The meaning of UFO obviously got nothing to do with the people that live outside the planet Earth. The meaning of UFO has to do with unfilled orders. We know, and maybe it would be healthy, just as a summary, to read the main page we have in our website. It would be great maybe to review a very key simple concept, but at the same time, that's the key for a trader. It's the unfilled orders. So if you look at what it says here on our main website, it says that there are many theories that try to explain why markets move either up or down. An undeniable fact is that behind the scenes, there is an underlying force made of buy and sell orders, which pushes prices either up or down when those orders get executed. So the reason why the orders are there in the first place can be really diverse. It could be news, it could be geopolitical events, it could be company earnings, it could be fundamental or technical analysis theories, it could be pure speculation, artificial intelligence, algos, trading robots, hedging needs, etc. But their very existence, it's the one that is responsible for price movement, meaning that without them, you may have a news, but price doesn't move, right? So a market would not move at all without those orders. Therefore, the process by which buy or sell orders change from being on field to being filled is responsible for market movements. And of course, in this room, all of us are traders, which means that our job is to catch market moves um, before they happen. Catch market move before they happen. So what do we need to do? We need to find the unfilled orders. So we enter before they get filled, because the moment they get filled, we'll catch a market move. Okay, and I don't think I'm saying anything too new here. It's just a little bit of a making sure we understand what the tool is trying to accomplish. All of us are traders in this room, so I believe that all of us are focused in this concept. Now, the above concept is the reason for the name of this app, Unfilled Orders UFOs. And AutoUFOs is an app that plots price regions in a chart that resemble flying saucers. They are located where potential buy and or sell orders are in an unfilled state, and those potential orders are expected to be in waiting mode and could be executed once the market revisits or returns to those flying saucers, producing market movements. Where markets would travel from flying saucer to flying saucer, green to red or red to green. So take a look at the chart that we have here on the side, where you can see those tiny flying saucers. Okay, and this is a little bit of an animated chart. We're gonna go over real-time charts in a minute, but you can see that you got those little flying saucers. Okay, and it looks like a round circle with a circle inside. So the circle inside, it's representing where statistically you would have the greatest concentration of orders, even though anywhere within the whole round circle, that's where the unfilled order should be, and there should be many based on the algo, right? Even though the greatest concentration would be the inner circle. So when you plot it, it looks like a flying saucer, and so that's our UFOs. That's where the unfilled orders are, right? So anyway, just a little summary of a key concept that I believe everybody who trades would be familiar with. So nothing too new, but at the same time, before we go over into understanding the use of the app, I think it was important to do this little summary here. Okay, so you guys, could you please just say a quick okay or yes on the chat box, just to make sure that everybody is following what I just said. And also, while you do that, I would like to remind you all, guys, to please have your microphone muted. There is someone in the room who has the microphone on. I can hear the breathing and the background noise. So please make sure your microphone icon in the bottom left is red color, not white color, red color. So that way it's muted. Oh, thank you so much, guys. I appreciate that very much. Cool. Very good. That's wonderful. Great. So now here is the app applied to a real-time chart. In this case, is the euro. We could look at any chart, but you can see that here in the region with the red with the flying saucers, the green UFOs. We expected unfillers to buy, and the moment this market came to where the unfillers are, well, now it's being produced. A move is being produced, and the market is moving in the opposite direction. Okay, so. Now, before I get into more technicalities here and talk more about the technology more in depth, I just want to say that this tool could be utilized in a various of ways. A trader could just rely on and execute trading opportunities just based on this tool, on this app, and that's it. That would be a very purist way on how to use the app, and it would certainly not be wrong. But at the same time, there are many other ways on how to use the app, which could imply certain combinations. So, for example, let's say a trader was to be a fundamental analyst and had a reason to buy a stock, for example, but needed to add a little bit of timing effect into that investment decision. Well, maybe the reason to get in is fundamentals, but then the timing or when to buy or when to sell is dictated by those UFOs. that could be one way on how to combine this tool with another technique, for example. Or maybe a trader is a technical analyst and loves Fibonacci retracements. Okay, and just quick reminder, if that's okay for everybody, to mute your microphone. I can see Doc and Van. You joined the session recently, and I hear background noise, so that may be you guys. Great. Thank you. So I was saying that maybe you're a technical analyst and you love Fibonacci's or Fibs, or maybe you are all about probabilities and therefore you love Bollinger Bands, or maybe you name it. You just pick a trading technique available in the world. There are many, many different ways on how to enter the market. Maybe you do breakouts. It doesn't matter what you do. Maybe you trade chart patterns. So it doesn't matter what you do. You could certainly use this tool on its own or combine with any other technique on how to trade, and basically kind of overlay probabilities on top of probabilities. Okay, but if you wanted to be purist, you could certainly approach it in a way where you are using this tool on its own. Okay, and when I say on its own, it also means many different things. For example, most schools of thought when it comes to trading and investing would suggest that in order to trade, it is healthy to use multiple timeframes. So, if you use it on its own, it may mean that you need to look at multiple timeframes, and conclude that there is an opportunity for you to enter, or anything you want to do in that particular trade. And again, what this tool is doing is adding you more an additional timing information to that particular trade. So the tool is very diverse. Okay, very, very diverse, and is what the tool is doing is basically looking for those unfilled orders. So one way I personally think about it, and I would like to share this with you in the chat box, and you guys tell me what's your thought in the chat box. One thought I would like to share with you, which is the way I look at this tool for my own trading decisions, is like a GPS. So as a trader, as an investor, as a hedger, no matter what you do in the marketplace, there was a moment in time where you had to learn how to do things manually, like reading a map. There was a moment in your life where for you to walk around the city, you had to learn how to read a map manually. Now, in current times, probably almost everybody in the planet that goes to a new place you've never been before, or even if you're in a place that but you want to be more efficient, most people use GPSs. Okay, and it's not because you don't know how to read a map. It's just because it saves you time. It makes your life easy. Sometimes even make you realize things that you would not have noticed were there. Um, just because our human eyes are used to what they use, and we all develop preferences, is part of being human. And in trading, preferences are not so useful, because unless we were to have the power to move the market ourselves, because our account sizes were to be humongous, then preferences are not useful. What we need to do as traders, it's to really be adaptable and adapt to what the market is really providing for us. And in the end, it's either we have a trade or we don't. We have the power to adapt and to execute or pass on a trade, but we don't have the power to create opportunities. So being able to assess a market in a way that is automatic, so you don't miss anything, and the other advantage is that you save time, has a pretty big power attached to it. And I would like to consult with you in the chat box. It would be great if you could confirm in the chat box if you agree with me on what I just said or not, because really that's the purpose of this tool: to save time, to make you more objective, to make sure you miss nothing when you look at the chart, because by default, unconsciously, your eyes may start looking at somewhere on the chart that for whatever reason you like, but just because you like it, automatically you are ready to execute a trade based on that concept, but you miss something that you didn't really pay attention to, just because you have your preferences or your kind of like your way to do things, which is normal. It's part of being human. But at the same time, we also know that humans, we're emotional beings, and that in trading sometimes works against us. So the more we resemble robots, meaning we put emotions on the side, the more efficiency we're going to gain. So would you guys agree on what I just said, guys? Yeah, I see your text. I agree, absolutely agree. Yes. Okay. Thanks for responding to this question. It's really cool. So anyway, so again, let me keep going. I know you have a few questions on the chat box I haven't answered yet. Believe me, I'm gonna answer everything. But I wanna first give you like the big picture of what's the thought behind the tool, what are the advantages the tool is gonna provide to you, and then we'll get into how to use it if you wish, or adjustments and stuff like that. Okay, so today we are spending some time together talking about technology. Okay, and that's the purpose of today. Okay, so let me give you a summary of benefits first, based on what I just said, and then I'll get deeper into what the tool is doing. Okay, so based on what I just said, uh, here is what I believe as a trader. So consistent action leads to consistent results. So randomness or hope should never be part of our trading game. AutoUFOs help us to be more mechanical, removing the human component when planning executions, as emotions and subjectivity are probably the biggest traders' enemies. Okay, so that's the idea behind the development of this tool, to make ourselves less human. Okay, to trade like an alien, be less human, because humans. We are emotional beings, and this often turns against us. Okay, so just a little humor, which I hope you appreciate and you don't mind, but at the same time this is serious stuff, because emotions can be very problematic. So key benefits: so more precisions with entries and exits. Okay, why? Because it doesn't matter how you trade. Let's say you are a technical analyst using support and resistance lines. Let's say you are using any technique on how to identify order flow. Let's say you are drawing fibs, or you do breakouts out of technical analysis patterns. It doesn't matter what you do. In the end, it's us as a human drawing the lines. It's us as a human identifying a chart pattern. It's us as a human taking a trading decision. And the problem of that is that, depending on how you wake up that day, maybe you have someone in the hospital, and you have some concern in your brain. So while you're looking at the chart, your level of focus may be different compared to another day where you didn't have those concerns. And therefore, there may be subjectivity, and subjectivity means randomness. And randomness, based on the upper paragraph, it's problematic, because you want consistent action. You don't want random action. Okay. So it reduces the tedious and time-consuming process where identifying trade ideas. Well, that's another benefit, which has to do with, my analogy with the GPS, right? So instead of looking at the map manually, which is absolutely fine, 100%, and sometimes it's actually a nice thing to do things manually, but at the same time it uses your time on top of the subjectivity. So what this tool attempt to do is to remove that, acting as a probability enhancer when combined with other trading techniques. Why? Because it could be combined with other things. So for example, you have a confluence with a key moving average and a UFO, and on top of that, you have another confluence with a Fibonacci retracement line from a higher time frame. So all those things together would certainly potentially add probability. Why? Because the techniques I describe as moving average and fibs, those techniques would potentially add unfilled orders that are not in the market yet. And with the UFOs, you are potentially spotting the unfilled orders that are in the market already. So you have unfilled orders in the market already, together with unfilled orders that may be added, and all of these together adds probability. Okay, so all those things are helpful. Realistic expectations when trading, thanks to a calibration process that reveals statistical performance. So we're gonna go over calibration in a minute, and I think it's probably the most important thing we need to discuss today, to be honest, because as a trader, let's say you have been trading by, I don't know, just pick any technique in the market. Let's say you have been, a classical way on how a person start learning how to trade is because you bought a book or because you watch a couple of videos on YouTube. That's a classical way, and I'm going back all the way to the beginning, day one, on when you started, and I'm just obviously making this up and improvising it, because I don't know exactly how you guys started, but I'm just pretending that's the case. Let's say you started reading a book, for example. So what did you learn in the book? Well, maybe you learned something about head and shoulders, or maybe you learned something about fundamentals, or maybe you learned something about order flow. Whatever you read in the book, in the end you acquire the knowledge, and in your mind now you are thinking, okay, if I apply this knowledge to a market, that should be helpful. But uh, the question is it going to work just as well if you apply it to the Nasdaq compared to if you apply it to the euro? Or is it going to be just as work just as well if you apply it to the euro, you apply it to crude oil? And you may start trading a market because you like the market, expecting that technique is going to work well. But the fact is that there is some hope in the process that, what you learn in that book or that YouTube video, um, is going to produce the desired results. And the idea here is to measure and measure with statistical results and measure through time, because another thing that has a lot to do with the fact that we are human is that for you to trade efficiently, you need confidence. And the only way to have confidence is to practice. To practice, so you develop experience, and experience will build your confidence. But again, which market should you practice if you don't know what are the expected results? So it's a little bit like the egg and the chicken problem in the life of a person who is learning how to trade or improving the results as a trader, right? And you'll see that in a minute. Right now, I'm just throwing out there some of the key benefits, but I'm going to demonstrate that in a minute, and you will see how it becomes very, very useful. Increases the trader's confidence, which makes easier managing your own emotions. Okay, so we always say that trading is emotional, which is true, but the reality is that when you know what to expect from a trading methodology because you've seen it enough, then emotions are easy to manage. When emotions are not easy to manage is when you add hope to the equation, which is, I'm not sure what's going to happen in my trades, and then there is a lot of hoping built in, and therefore emotions arise too strongly, right? So um, benefits, we're going to be able to use the UFOs with all assets as long as we have a chart, and also with all time frames, meaning that this tool will apply to the short-term traders and also the long-term investors. Okay, so now that I gave you what I would call a proper introduction to what is this tool, I think it will be time to give you more detail now on how it works and how to adjust it, how to calibrate, and all those things. Okay. Um, let me read your questions. I think it would be a great time now to read your questions before I begin talking about the how. And you guys feel free to keep typing on the chat box, and then later I'm also happy to pass you the microphone, and you guys can express yourself with the microphone instead of typing. I'm very, very happy to do that. So let's see, I'm just reading out your questions. I went back in the chat box. So Cliff asked, Jose, will you create a similar indicator app for Thinkorswim? So at the moment, the app has been developed for TradeStation, but certainly there are works happening to have this app available for many other platforms as well. But at the moment, we have it with TradeStation. Okay. If you don't use TradeStation, by the way, little tip there, in case you don't know, TradeStation used to be a broker that used to charge monthly fees to access the software, but they changed that long time ago, and now you can have access to TradeStation for free, as long as you deposit some money in the account, but they will not charge you in a monthly basis. Okay. Even some data fees would be also free of cost. Other data fees they would charge for it. So you may want to consult with them, but that could be one way to use it if you prefer to use a different platform as well. Okay. Cliff, how to use it as an options trader? Absolutely. Absolutely. So we can talk about it, but right now, just by looking at the euro, even though euro has non-regulated options, okay, but you just pretend that's a stock, for example. So if you see three green boxes on top of each other, three green UFOs on top of each other here. So just think about the probability of price going below all of these, right? It's pretty low. So maybe you will want to do a bull put spread, or above those supply zones, a bear call spread. Maybe you do an iron condor. So there are multiple things that we could do, and I will certainly discuss that later. Yeah, will the UFOs on the daily chart also show up on the hourly charts automatically? Yeah, absolutely. So if I look at the daily chart of the euro and I change this to 60 minutes, the moment my platform has the data loaded, here are your UFOs in the 60 minutes. If you change to the 5 minutes, here are the UFOs automatically in the 5 minutes. If you change to the 4 hour chart, here are the UFOs automatically for the 4 hour chart. If you change from the euro and you move into the NASDAQ, so now we are looking at the NASDAQ futures, and the moment the data is loaded on the computer, which it says waiting for data, here we go. So here are your UFOs with the NASDAQ as we speak. Okay, and again, this applies to all time frames. Now if I switch to 5, automatically you can see your UFOs in the 5. Okay, so it's quite convenient. As I said, this is like a GPS. You're saving time, etc., etc. Okay, Andrew, tech helps. Yeah, definitely. Thank you. Dark colors versus light colors, Orlando. Yeah, I need to talk about that. You guys may notice that some of the UFOs are dark red, some are light red, and some of the UFOs are dark green. And in this chart, we don't see it, but let me move to a daily time frame of the Nasdaq, for example. Notice how some of those UFOs are dark green and some of those UFOs are light green. Okay, so I'm going to explain what that means in a minute as well. I will certainly talk about that. London Trader, I guess you can use this tool as a way to enter trades on 4 hour time frame, also using the daily for the trend and the weekly for the higher time frame, as you have taught in the past. Yes, absolutely. Absolutely. Humans mess it up. Yes, that's the emotions. Trade like a volcan. This is one good tool. My query was oh, thank you so much, Christopher. Nick, when you be able to load more than 1,000 bars? Oh, that's a good one. That's a very good question. I need to talk about that. Nick, Jose, can you overlap higher time frame? Bojan, so let me talk about this. Okay, let me talk about this. So first of all, let me take Nick's question about the amount of bars loaded in the chart. Okay, so here we go. And this also has to do with the prior question about having this tool developed for other platforms and other brokers. So here what happens. We are dealing with TradeStation here, which I believe, and this is just my opinion, so we could agree or not, and it's okay. But probably it's one of the most advanced brokers worldwide when it comes to trading technology, trading software, and so on. They have so many things, so many tools embedded TradeStation, and it's just incredible. It's years and years of development. Having said that, precisely because it's years and years in development, a lot of the developments they have done is kind of like keep adding on top of something they had before. And if you think about the core of TradeStation, the core of TradeStation was developed a long time ago, and technology has changed a lot since then. So what I'm trying to say is that TradeStation has a 32-bit core. I don't want to get too much into technology, but basically 32-bit means that no matter how powerful your computer is, you will not be able to use more than 4 GB in your computer system. So you may have a computer with, a 16 GB of RAM memory. Doesn't matter if you have 16 or 32 or 8 or 64, which would be a monster computer. It doesn't matter. TradeStation could only use 4 because the core is designed with 32-bit technology. So what happens is that right now the US market is closed, so the amount of activity is very low. So if I load this NQ chart and I was to load here, I don't know, 5,000 bars, and I go back in time 5,000 bars, which is a lot of work for TradeStation to calculate all those UFOs. It's not a big deal as long as I have the data on my computer. Look at that; it just did it very quickly, so no problem. But now the problem is that when the market opens, and instead of having very few transactions, you have many, many transactions happening. Every tick, TradeStation has to recalculate everything on the screen. And those 5,000 bars, no matter how powerful your computer is, are gonna very likely freeze your TradeStation. It doesn't matter how powerful your TradeStation is. Your TradeStation is likely to freeze just because the core of TradeStation is 32-bit, and there is a moment in time where it will not be able to use more resources that are indeed available in your computer, but TradeStation will not be able to do that. So we have concluded that anywhere between 1,500 bars to 2,000, 5,000 bars, it's kind of like the sweet spot to not to run into any slowing down effect in TradeStation. Now, 2,500 bars will slow down some computers if they're not very powerful, where 1,500 bars will work with all computers. With 1,500 TradeStation doesn't slow down at all, even if you are trading in peak market hours and you have so many transactions happening at the same time. Your computer will not freeze. So comment number one to use the app. You want to make sure that, because when you change time frames, TradeStation has default parameters. If I change to the 5-minute time frame of the Nasdaq here, you can see, if I look at my own chart, I have it set up as 1,587 bars. You may find it's a fancy name. It's a Fibonacci name. This means nothing, but it's around 1,500, which is the threshold where above that number you may start getting in trouble. Why? Because during market hours, TradeStation may need to process too much, and the core has its limitations. So, unfortunately, there is nothing that we can do to improve that, unless we were to activate some form of a non-real time analysis, which the idea of UFOs is that it's real time. And for it to be real time, it needs to process every tick. And if it processes every tick, again, we are running into the limitation with the core of TradeStation, which, again, we'll fix that in other ways. And that should not be an issue with other platforms either. But at the moment, that's what we have. So the little trick is not to exceed 1,500. And if you want to experience, maybe you can try 2,000 and see what happens. And if it still works fine, maybe you can add 2,500 and see what happens. But just know that now you are really, crossing the line. And probably, if there is this one day where there is a lot of market activity, like classical day where the market is crashing or something like that, so you may get in trouble. Okay, so my recommendation is make it 1,500. And here's the thing. It would be important that once you set up this parameter of 1,500, you set it as default. That way, every time you open the 5-minute time frame, it will look for 1,500 bars, which realistically, in most cases, it's enough. But make sure you set it as default, because if you were not to set it as default, and let's say now you switch to the 30-minute time frame, right? You switch to the 30-minute time frame, and the moment you switch to the 30, and then you go back to the 5, so you will now notice that what happens is that you are back to my prior parameter, which is 1,597. So if you want it to be 1,500, I had to set this as default, and that would be for every time frame you use. So if you use the 3-minute, the 5-minute, the 15-minute, the daily, the weekly, for all time frames that you use, it will be recommended that you set as default to avoid any translation freeze and stuff like that, because that's basically that's the issue. That's the issue that you may encounter just because of that. Okay, so in my case, as you can see, now I'm looking at 60 minutes. So if I go back to looking at the parameters, I have again that 1,587. If I switch to 4-hour time frame, I am back now to 1,597. If I switch back to the daily time frame and I look at my parameters, and again, you may notice that I'm double clicking on the candles to get access to this window. So 1,597, this is the amount of bars I am loading in TradeStation. So I guess some of you in the room with us right now are using TradeStation in a regular basis, and you know what I'm doing here. If some of you are not using TradeStation on a regular basis, it's just very simple. You right click and select format symbol, or you just double click on the candles. Little trick to get to that menu quicker. So now you are doing format symbol just by double clicking on the candles themselves, and you just change that parameter and set it as default. That's very, very important, again, because if not, you will run into technology freezes. Okay, so that was to answer Nick's question. Okay, now Bojan, Jose, you said, can you overlap? You cannot. You can certainly have two charts next to each other. So you could do something like that. Okay, let me do this. So you could certainly do something like that. And now on the, let's say, for example, on the time frame on the left, you have the Nasdaq in the daily time frame, and the time frame on the right, you have the 60 minutes. So you can certainly do that, right? And now you understand where are your trades, and you also understand where you're at in the big picture in that particular market. And there is a lot of room to fall here. The next green UFO is quite far, so in the 60 minutes you may want to plan on a short, stuff like that. So you would be able to do that, but you cannot overlay. Again, it's a limitation with technology in this particular case. Okay, Anthony, they keep adding new technology. Yeah, on top of that foundation, you're right. I mean, I love transition personally. I'm just sharing with you, but you're right, and I know they are working on a major update. So when they do it, hopefully it will have a more powerful core, and then we'll be able to benefit of more functionality. Orlando, since the app is real time and dynamic, sometimes the UFO goes away, which is okay. But could you? Yes, yes, yes. To have the UFO to stay on the chart. Okay, so let me get a little deeper into before I answer your question, Orlando. Let me get a little deeper into having everybody understand a few more things, and then I'll explain about this thing about the UFO sometimes disappear and stuff like that. So it's all about the settings. Okay, guys. If you were to right click format analysis technique. Okay, if you were to right click format analysis technique, and then you were to pick your flying saucers, right? And you were to look at all those different parameters. Okay, well, notice how there are many different things that you could do. Okay, so you can do a calibration, which I need to talk about that. That's really important. You can show the stats. I need to talk about that. That's really important. You can show flying saucers, meaning that you may want to show those circles on the right, or you may want to hide them. Some people like to show them. Some people like to hide them. I personally like to show them because remember the dark circle is where we are supposed to find the greatest concentration of orders. So the ideal entry point is probably where the dark circle is, even though anywhere from the bottom part of the circle to the top part of the circle is an okay place where to enter, but really the dark circle is the ideal place. But again, you could choose to not to show it. I'm going to show you all of that right now. You can show the bands, okay? So you can show the bands all the way from the left. So that way, when you see the UFO, you kind of look left, and now you understand why the UFO is located in that place. Or maybe you just want the UFOs and you don't care about the bands, so you can hide the bands. That's another thing. You can also hide hit UFOs, okay? And this has a lot to do with your question, Orlando, which I'm going to address right now, because right now, think about the concept of this tool. So it's a red UFO because we expect sell unfilled orders. Red is for sell, UFO is for unfilled orders. So red UFO means sell unfilled orders. Now, if this market was to rally up, hit hit the red UFO and drop from it, it would mean that those unfilled orders are being filled. So the probability of taking a trade at this price level would not be as high. And depending on how much it went inside and has it taken out the little circle inside where the greatest concentration of orders should be found or not. So depending on you know how much you have consumed, how many of the unfilled you have consumed, unfilled that were expected to be in that red UFO, red flying saucer. Well, then that UFO may dynamically disappear. Just to let you know visually that, hey, you know what, this is not on a high probability trade anymore. You may want to get out, or you may want not to use that one. Now, if you choose to type this as false here in the format indicators parameters, okay, which is what I'm doing now, what's going to happen is that notice how there are many, many zones now that still show up. Zones that didn't show up before, and they are super light color now, which means that, by the way, the darkness of the zone has to do with the probability of the zone. The lighter the zone, the less the unfilled orders you should expect. The darker the zone, the more the unfilled orders that are supposed to be available. Is that making sense? So in this case, notice that I would still show them. I would still show the zone, um, but it's not high probability. So let's say, for example, some time ago, which is your question, Orlando. Let's say some time ago, you took a long trade by buying, where I have here this. Let's use magenta color. You had a magenta color circle here. So let's say where the magenta color circle is. Let's say some time ago you got long and you bought the Nasdaq in a 60-minute time frame, right? Expecting it to go up and whatever. And let's say your target was higher, so you didn't take profits where these red UFO is, which maybe you should have, but let's say you haven't. Okay. So let's say you haven't because you were shooting for a higher profit, a higher target, and now you see that thing coming back to you, coming back to you. Well, the moment you took this trade, if I could go back in time with TradeStation, that green UFO below would be a dark or darker green. But if I now go back to the settings and I look at the calibration settings, I look at the hide hit UFOs, which is a setting I changed before, and I make it true, meaning that hide the UFOs that have been hit too much and too many orders have been consumed, so very few unfilled orders are left. Well, now this UFO, it's gone. And as a trader, at this point, you may be in a situation where you think like, oh my God, is it because my trade was bad? Well, no, it was not bad. Actually, it worked well for a while. But the problem is that now it's coming back to you and you don't have significant amount of unfilled orders left. So, this could be, for example, when a UFO disappears, this could be a reason for you, for example, to move your stop to break even or something like that, because you don't have many more unfilled orders behind supporting the trade that you have executed at first. So depending on how you set up the indicator, you may have those UFOs to stay on the chart if you select the setting to be false for hide heat UFOs. So your UFOs stay on the chart, even though they are lower probability now, but they show very light. Or if you prefer to keep it simple for yourself, then you use the true parameter for hide heat UFO. You use the true parameter, and now those UFOs would hide, and you don't see them. Okay, so that would make your trading more simple, but at the same time, it also depends on your personality. Some of you, I mean, if you're like me, I'm not saying that we need to be a specific way to be a good trader. We are just all different people. So if you are like me, I happen to be a perfectionist, so I like a lot of information on my charts. Maybe some of you prefer to keep it very, very simple, and therefore you want less information on your chart, and you want the information that is the most relevant. So what would you do? Well, now you would, either activate the function hide or deactivate the function hide, and that's the long answer to your question, Orlando. Okay, so you could have those UFOs to stay by doing that, but at the same time, it would also show many other UFOs on the screen, and at times it could be a little overwhelming. So, for example, if I move to the, I don't know, let's say we look at crude oil, and you look at the 10-minute time frame of crude oil. So here's crude oil in a 10-minute time frame, and you can see that. I mean, it's a great thing that you understand that this thing is because of that thing, and that thing is because of that thing, and so you can see all those different market reactions to unfilled orders in the past, and that's pretty nice. But for example, this 61.29 has been a fantastic level where to trade. But if you were to look at it now and you were to type true, you would see that 61.29 is gone. Why? Because that level has been tested too many times. Too many times order got filled, leaving too many unfilled orders behind, leaving too little unfilled orders behind, and therefore your probability is less. Okay, and you can see how you could certainly simplify your trading by changing the parameter. Okay, but again, you may not see everything. So if you want to see everything, you just change the setting. Okay. So again, long answer to your question, okay, but good one, very good one. Let me see. And by the way, by discussing what I discussed as well, I also answered your prior question, Orlando, about dark colors and light colors. So what else do we have here? Anthony, they keep adding technology on top of the old foundation. Yes, we talked about that. Orlando just answered your question. Um, yeah, Anthony, thank you for that. Height hit UFO, Orlando, yes, you got it. Andrew, guess it's a V8 engine versus a V4 engine. No matter how far you push the pedal, V4 won't perform like V8. Yes, that's what it is. That's what it is. Will 1,500 bar generally be enough data? Yes. TM Garland, yes, it's normally plenty of data. Now, There are cases like, for example, if I load the 4-hour time frame of crude oil, I think that's perfect that we're looking at crude oil, because crude oil has been just dropping and dropping and dropping. So look, in the 4-hour time frame, you still, even though this thing has been dropping like crazy for a while, and the depth of the drop, it's probably, I mean, you are probably all aware of what's been happening in the crude oil markets, because it's really no joke. So still notice how the 4-hour time frame is still giving you zones. So that makes you understand that, 1,500 bars is certainly enough. Now you tell me, wait a minute, but the time frame I like to use is 30 minutes. Okay, well, if you look at the 30-minute time frame, well, today you have this zone that has been created, and price came and bounced, and then went to that zone and bounced. So that's nice, it's neat. But let's say you looked at this yesterday. So let me move one day back. Well, one day back, you still got the same. So let me get one day less on the 30. Here we go. So let's say you are looking at this on the crude oil, and this thing was like the world is ending on the day, right? So this thing just keep going down for a long period of time. Now we are using at the 30-minute time frame. So notice that if I zoom out all the way, notice that I got nothing on the left. So in a case like that, the only way to get your green UFOs would be to add more data. So you, again, when you do that, just do it slowly. You start with 2000 first. Okay, still not show. We still need to go further in time to find unfilled orders. Maybe you go for 2,500 next and see if we find the unfilled orders. The problem is that it went so low that you need to go back in time so much to find buy unfilled orders. So now you go for 3,000 and you just keep going until you find something. Is that making sense? Which is not showing at the moment, because we still need to go deeper down. You see, there is nothing below, right? So it's because this is a crazy example, and it's a perfect timing for me to talk about it, and such a good question. So if you were to add 5,000, I'm pretty positive now we're gonna see something. Not yet. Okay, not yet. So really, this thing really needs many bars. And now, what's the problem of using 5,000? Well, we talked about it earlier. Let me use 10,000. If I use 10,000 bars and I go back in time, oh yeah, I know what's happening here too as well. I'm using an unadjusted chart. Sorry for that, guys. I'm kind of like shocked. How is it that with 10,000 bars I'm not finding anything? So let me do this. I'm using an adjusted chart. I'm using add CL by itself. So if I do some adjustment here, okay, just to eliminate the non-important information on the chart. So now by going back in time 10,000 bars, and it's going to take a while because it needs to load 10,000 bars, which is a lot. Well, I loaded way too much data. So it's gonna be able to calculate this for me. And let me see. Still not. Wow, it really went so low. Let me see how far is that in the daily time frame. So we are talking about the market is reaching levels of November 17. So it's like 1 year ago. So quick math here. So 1 year, 24 hours times 2, because it's 32-minute time frame. So that's 48 candles per day times 365. That is 17,000 bars. This is what I need to load to be able to go 1 year ago if I use the 1 minute time frame. So if I use the 30-minute time frame. So if I was to load a 17,000 bars, I should be able to find those unfilled orders. The problem is that you cannot do that during market hours because it will freeze your trade station. So you will need to do it right, like now, when there is very little trading activity. Here we go. Now you can see your unfilled orders here. Is that making sense, everyone? So now you can see your unfilled orders, but you had to load a lot of data to be able to find them, because crude oil is such an exaggerated example where this thing has just been dropping and dropping and dropping and dropping and dropping, and that's why we need to go back in time so much. Okay. Now, should you do that? Well, you could do it. What's the downside? You cannot do it during market hours because your trade station will freeze. So it's either you do it after hours or over the weekend, or you use a larger time frame, like 4 hours. Look, here I'm using 4-hour time frames, and it's loading. Here we go. So, and I was using AdCL earlier, so let me go back to where I was before. And with the AdCL, you can see that there is a beautiful green UFO here, and the amount of bars I have on my chart is 1,500, right? So again, you're gonna have to play with it a little bit, and realistically, if a market is going down so aggressively, uh, I mean, the trend is down. So if you want to join the trend, you probably would use lower time frames. And every time you have a retracement into a zone, you would try to get in here, just like here, or here. You will want to get in here, but certainly, probably, you would not want to get long when a market is so violent against you, unless you use a larger time frame. And if you use a larger time frame, like for example daily, well, now you're gonna be able to see your UFOs with the same amount of bars in the chart, which is 1,500. Okay, so anyway, just playing a little with the time frames here, and let me go back to the current date, and hopefully I did answer your question. So what do we have in here? Can you go over the calibration parameter? Yes. Okay, so let's talk about calibration, Anthony. Very good. Let's go over calibration. Okay, so now, look, think about trading. And I'm supposed to talk about technology, but just so you understand why the technology does what it does, let's talk about trading for a minute. So the job of a trader, and please say yes or no in the chat box to confirm if you agree with me or not. The job of a trader, if you wish, in my mind, is to identify probability trades that are high probability, trades where we have an edge, trades where we have odds in our favor, so you are likely to profit. But that's not enough. You also need to make sure that when you profit is greater and when you lose is lesser, because if you were to profit too small and lose too big, you may find yourself in a situation where you profit often, but you are not making money because when you lose is too big and when you profit is too small. So again, this is a basic principle of risk management. No matter the type of trader you are, I would kind of expect that you agree on that one. Would you mind to confirm with me in the chat box? Thank you, guys. I mean, I'm not saying anything magic here, but it's key. It's key because this is what the tool is going to allow you to do. And so now, uh, what is one way to increase your probability? One way to increase your probability is to have a tool that gives you an edge, for example, unfilled orders. But let's talk about probability. What does it mean to increase probability? Well, in my mind, there are two types of probabilities. What is the probability of having a good entry? That's one probability for us to discuss. But also, what is the probability of reaching your targets? That's another very important probability for us to discuss, because um, anyone in here today has ever been in a trade and the market moved your way but didn't reach your target and then turn around and got you out for a loss or a small profit, but you never got your target? Has it ever happened to you? So yeah, you had a good probability as an entry, but you didn't have a good probability as a target, right? So the idea here is to talk about both probabilities, the entry and the target. So how can you make your entry a higher probability? And let's forget about unfilled orders for a minute, which is the key and is the purpose of this tool. But for a minute, if that's okay, let's forget about unfilled orders. What is one way to increase your probability of not being stopped out? Well, one way to increase your probability of not being stopped out is to increase the distance between your entry and your stop. And I'm not saying that this is what you have to do. Actually, I would argue this is what you don't want to do. But just bear with me. I'm not talking about any trading technique at the moment. I'm just talking about pure statistics, if you wish. If every time you take a trade, your stop was very far away, well, then statistically speaking, your probability of being stopped out would be less. And the same happens with the targets. If your targets were to be closer to you, then the probability of reaching your targets would be higher, Why? Because your targets are closer to you. And I'm not saying you want your targets to be close, because if your targets or your exits are too close, what's going to happen is that you make small profits, which I didn't say this is what we want to do as a trader. I actually said the opposite is true. But from a purely probability point of view or standpoint, the further away your stops are, the less the probability of being stopped out. And the nearer your targets are, the greater the probability you will reach your targets. Could you on the chat box, could you please confirm with a quick yes or no that you are with me based on what you just said? I'm just talking about probabilities. Make sense, everyone? Cool. So that is what calibration does. Okay. So if you double click on the box and click yes, which is a shortcut for you to get into format indicators. Um, when you get in here, you have a calibration parameter currently set at 0.5. And 0.5 is kind of half-half, right? Because calibration, if you look at the manual, which by the way, I need to show you how to download the user guide. There is a user guide that you guys could download, and in this user guide, you got many things here: legal considerations, what does this app do, which we talk about it, um, how to subscribe, which I'll show you later, how to make sure TradeStation is ready for the app. There's a couple of things you need to do with TradeStation to make sure TradeStation is ready. Um, how to launch a ready-to-use workspace with the app in it. So, it's very easy to launch the workspace with the app in it. How to do that. I'll show you all of these later. How to manually insert it if you want to do it manually. I'll talk about that later. Which components are displayed. We talked about the flying saucers, the UF, all those things. I'll get back into that. But finally, I'm getting here settings that are available. I kind of showed you the settings a minute ago. But now I would like to get into how to calibrate the app. Okay, page 15. Okay, that's so you have an explanation here on how to calibrate the app. But instead of having you read it, let me explain it. So the calibration parameter here goes from 0 to 1. So you can input anywhere between 0 to all the way to 1. By default, it comes with 0.5, which doesn't mean it's the one you want to use. It just happens to be halfway between 0 and 1. Why? Because if you do 0.5, statistically speaking, what the app will do is to make your zones, your UFOs, narrow enough so it's reasonable. If you were to go for 0.1 or 0.2, the UFOs will be probably very, very narrow, where it's not reasonable anymore. Why? Because you are too close to your stops, right? If your UFOs are narrower, right, uh, you would enter the trade anywhere between the UFO and maybe you have a stop beyond the UFO. So the distance from entry to stop is too close, and probably not a good idea, even though you would have many, many trades to execute and so on. And also, if your zones are very, very narrow, what's probably going to happen is that your targets, because the zones are narrow, your targets are very far. So the probability of reaching the targets is less, right? If you were to go to the extreme, like 0.9, 0.8, now your zones would probably be wider, statistically speaking, they would be wider. So the probability of being stopped out is less. And also the probability of reaching the target is more. Why? Because you have, for example, here you have the red UFO, and the red UFO has a rival UFO, which is the green UFO. So if that market was to hit the red UFO, you would expect it to go down and hit the green UFO. And if you were to use a calibration parameter where that number is very high, it would make those UFOs to be wider, and therefore they are closer to each other. So if they are closer to each other because the UFOs are wider, what happens is that your probability of reaching the target is more, and also the probability of being stopped out is less. So you would have a greater probability, but you would also have less trades. So where is the sweet spot? Well, it's trader preference, and it depends. Some of you may want to trade more often and you don't mind to be stopped out a little more often. Some of you may be more perfectionist and you are okay trading less often, but you want to be stopped out less often as well. So that's going to be user input, right? So the way you calibrate, let me demonstrate for you. For example, here we're looking at crude oil in 60-minute time frame. So you would come in here, show UFO stats, and when it says show UFO stats, you would type true. And the moment you do that and you hit OK, now here on the chart is going to show you a statistical parameter, which in this case is 53.67. So let me talk about what that means. What this parameter means is that out of all the data loaded in this chart, which is 1,500 bar, 53% of the times that a market entered a red UFO, priced moved down until it hit the rival green UFO. Or every time the market hit a green UFO, the price moved up until it reached the rival red UFO. So this is probability of price entering, turning, and reaching your target, assuming your target is the rival UFO, which sometimes they are too close, and probably as a trader you would have not taken this trade because you have too little profit zone here. But if you were to ignore everything and just look at pure stats, the probability of bouncing from UFO to UFO is 53.57 in this particular time frame with that particular setting with a non-adjusted symbol for 1,500 bars. Okay, so let's try to let's look at the euro, for example. Just let's move into a few markets and let's play with this a little bit, and then we'll do a little more adjustments, and I will show you how to calibrate this properly. So right now, if you look at the euro, same parameter gives you 70%. So 70% of the times that the market came into the UFOs, it bounced to reach the opposing UFO. And by the way, it makes a lot of sense because if you think about the euro, it's been just doing a normal thing in recent times. And when you look at crude oil just being trading through every green UFO in the market because this market's just like going nuts and crazy to the downside. So institutions are pulling their on-field orders off, and that's why you got a lesser probability. Okay, but in any case, it doesn't matter the probability. We want to look for an optimal number. So let's say you are looking at the New Zealand dollar. So you keep looking at different markets, and different markets will give you different probability metrics. Let's say you are looking at the S&P. So at the S, now I'm looking at the S&P. So you got 59.21%. So again, first of all, you can see how for whatever parameter you have decided to use for your own trading and investing opportunities, notice how this tool tells you what to expect, and that's pretty cool. But let's not stop there. Let's try to make this a little better. So, for example, let's go back in time, and sorry, not back in time. Let's go back to the calibration settings now, and let's add 0.3, for example. If I add 0.3, what happens? Well, it's giving me a worse number. Okay, my zones are narrower, as I said. I have more, but I got a lesser number. Why? Because I explained that before. Because the zones are narrower, you are more likely to be stopped out, and also your target are further away. So you may still get a bounce. The probability of a bounce is probably the same, but reaching your target may not happen because the rival green UFO or the rival red UFO may be too far. Does that make sense? If you were to change this to 0.7, for example, well, now it's giving you 65%, which, as you can see, it gives you just a few less zones. Some of them are wider. That one on the top catches really my attention for how wide it is, but that's what it is. The tool just adapt to what's available. And now you have a better probability. Okay, if you were to go for, sorry for that. If you were, again, I'm double clicking on the rectangle, so it gives me access to the format indicator. So if I do 0.6, which is somewhere around, it's 63. So maybe you're like, okay, you know what? I'm gonna go for, what about 0.65? 0.65, 63.92. Well, 0.70 was better. So what about 0.75? 0.75. So what happens here? 60 is not so good. So let's say you concluded, okay, I like 0.7. Let's say that's the case, which this is gonna be your preference, right? So now that you got 0.7, here's the key. You don't want to, and this is just me sharing with you a little bit of experience. I would suggest that you don't want to get too obsessive about making this number to be the greatest in the world. Just get something that looks okay, because the real calibration is not done with the data you have on your screen. If you look at the data I have on my screen, I have data from 1150. I got 1,500 bars ending up in 11/15, 2018. So the way I would like to suggest you to calibrate this is now go back in time, and instead of November, go for October. So now you go back to October, hit enter, and now starting in October, that tool is showing you 1,500 bars, and what's the probability, which is 69. So you got 65 and you got 69. What if instead of October now, you move back in time to uh, September? Now we go back in time one more month and we load another 1,000 bars, and now it gives you 66. So you got 65, 69, 66. What if you go back in time now and you go back to August? So you go back in time, and by using August, now it's giving you 65. So you got 65, 69, 66, 65. So notice how the probability remains quite stable, which is what you want to see. You don't want a calibration parameter. Let's say you had 0.3, and one month it gives you 70%, but the next month is giving you 40%. It's way too much divergence, way too much difference, which means that that parameter was not representing um, anything significant enough. But if you got some parameter that as you go back in time, now I'm looking at July, right? 68, right? So now it's July 68. So we got 65, 69, 66, 65, 68, right? I'm not even sure I'm mentioning the right percentage, but you get my point. So what if I go to June? If I go to June now, go back in time, okay, I'll wait for pending data, I guess. No, it's good. 57. So that one is a little worse. Okay, it's a little worse. But I guess that we have seen 57 in another chart earlier, so maybe we'll take it. What about May? We'll go back in May, spending data. So we have PD on the upper left. I'll wait. So you just need to load a little more data, and it's going to show up just in a sec. Come on. Network speed. Here we go. We got 62%. So you got 65, you got 69, you got 66, 65. The lowest we've seen is 57. Now we got 62. So now what about these? Now go back in time now and say, okay, what about last year? What about 2012? Let's go back to 2012. Right? I'm just picking random dates, right? So what if you apply this tool in May 2012, right? And you loaded 1,500 bars, because again, at the beginning of the session, I was talking about confidence, and it's going to take a while for these to load. So let's be patient here. But earlier I was talking about confidence. Okay, so look at that. If you apply this tool in 2012, you got 64.5% probability. So you guys see the consistency, right? That's what you want to see, because when you see the consistency, the other thing that is going to happen is that now as a trader, you're going to feel confidence. You're going to be like, okay, it seems that this tool is a tool I could rely on. Of course, I may do a bunch of extra things on top of my trading. It's not like I'm going to take every single UFO. I may look at the trend. I may combine it with moving averages or fibs. I may look at different time frames to understand the big picture too. You name it. You may do a series of things on top of this. But now, forget about the other things. If you were to use the tool by itself, you know through time you have certain level of consistency in your results, and that's going to build your confidence even if you never traded before. And same thing, like for example, the day when you start trading a market that you have never traded before. Let's say you've been trading the S&P futures that I'm using right now, and in recent times you decided, look, I never traded crude oil, but you know what, I feel that it's time for me to add crude oil to my life. So you load crude oil, and you never traded crude oil before, right? But now, before you start trading, it's like, okay, so what to expect from crude oil? And now with these setting parameters, you got 59.91. And what do? Same story. You go back to your format symbol, you go back 1 month in time. So what if I traded last month, right? And now you go back in time, and you're like, that would be 60. It's okay, I can take 60. What if you traded the month before, September? Uh, Now it's 61. Well, I can take 61. Let's go for 61. What if you trade it in, I don't know, 2015? I'm just making this up. So you go back in time to 2015. It's going to take a while to load. But now you will have your results on the screen as well. So what's going to happen to you now? Well, now you are removing a lot of the human component out of the equation because you understand what to expect from those markets that you never traded before, if that was the case, and now you know what to expect. And then of course, um, 62 in 2015. So you can see the consistency, and again, that's what traders we need, because apart from consistency and results, we also need confidence to be able to trade. I'm back to the list of benefits when I said it increases the trader's confidence, which makes easier managing your own emotions. You cannot manage your own emotions if you don't know what to expect from your trading methodologies, and you don't know what to expect from a trading methodology unless you've been trading it for years. So how do you know? Well, that's when technology comes into place. That's your GPS, right? How do you know the first day you went to Singapore and you wanted to walk the city? Well, yeah, you didn't know. I mean, you could have read a little bit in Wikipedia, well, how was the city, but you had to walk around, and you could certainly use a map, which is a good way to do it. And if it's the first time, well, probably you do it manually. You walk the city with a map. But then, if you really want to be efficient and know what to expect, that's when you use the GPS, right? So it's kind of the same concept, and hopefully, what I'm saying is resonating with you guys, because in my mind, it's quite key. Okay, but anyway, let me go back to the chat box, because you guys have been typing, and I want to answer all your questions. So, let me see. So we have Anthony, can you go over calibration? So I just did. Historically speaking, Bojan, does the app work best when certain future markets, or just wondering if it's calibrated per market, or once fits all? Yeah, I would say the app will work. The more heavily the market is traded by institutions, the better the app will work. If you were to apply this app to a small market, let's say a penny stock, it could certainly work, but probably will work less well compared to a market that is heavily traded by institutions. Why? Because what the app is doing is looking for unfilled orders, and you want big stacks. So, markets that are traded heavily by institutions are the ones that will give you the better results. And of course, the bigger the markets, for example, if you look at the euro, notice how this number is one of the highest we have seen. Why? Well, the forex markets are very big, right? And there certainly we have a lot of institutional trading in those markets. It doesn't mean you cannot trade the S&P and crude oil. Certainly you could, but definitely I would not recommend that you trade stocks or very small markets that are not heavily traded. Okay, so that's going to be the case. For example, let's apply this to a stock. So if you apply this to Microsoft, for example, if you load Microsoft in a 60-minute time frame, we are likely to get an okay result. Okay, it says 43 now. Let's wait a little bit for pending data. This number should change, but it's not going to be as high as 67. Okay, I would not expect it as high as 65, even though I just picked a very, very liquid stock. Microsoft is very liquid. So, oh, by the way, I'm still looking at 2015, and that's why it's loading all this data. No, it's current date. Okay, got it. So it's coming PD on the upper left. So we wait for the PD to go away, and we'll get our final number. Come on. Here we go. So you got 59.34. Okay, that's the final number out of all the data loaded in the chart. So what does that mean? Well, you can see it's a little, it's less good compared to forex or futures. Why? Because it's less heavily traded, and Microsoft is a very liquid stock. So if I was to apply this to, let's say, Johnson & Johnson, which is still liquid but less liquid, it's possible. Okay, and again, don't pay attention to this number yet, because it's still pending data. Okay, so we need to wait for the yellow sign on the upper left to go away. So I would expect, and maybe I'm wrong, but I would expect probably a little bit of a lesser probability with Johnson & Johnson. Still okay, but less. Okay, why? Well, because it should be less heavily traded. Okay, so it's 57. So you see just a little less. Why? Less institutions. So how cool is this? Now you can kind of measure the institutional participation, right? And you know what to expect from your markets. Certainly helpful. I can even stretch it beyond. What about pre-market and post-market? So what about you look at the 24-hour chart of Johnson & Johnson? Well, now take a look how those pre-market zones are much less efficient. Why? Well, because you got you got less buying and selling happening at that time, so you got less unfilled orders. So now I could totally understand if you tell me, yeah, I'm just going to ignore the pre-market. Okay, you could certainly do that. Okay, now what about ETFs? Okay, you guys were talking about markets. Well, ETFs, for example, if I look at gold, okay, so let me add gold. Here is gold. So I'm loading gold in a 4-hour time from here. And guys, I know some of you are in London, so it's super late for you guys. You guys are the best. I'll put together other sessions as well, guys, so we can reconnect and keep going deeper into all of this. Okay, I'll keep you all updated. But let's have this chart to load here. So we just need to wait for a little more data. Let's do this. I'll use the continuous just out of simplicity. So, for example, let's look at gold in a daily time frame. So, gold in a daily time frame is giving us 69.59% probability, right? But what about the gold ETF? I'm pretty positive it's going to be much less. So, GLD, which is the gold ETF, is only 42. Okay, why? Well, because a lot of very relevant trading in gold happens during the Asian time zone and the European time zone, and the GLD ETF doesn't see that, apart from the price decay that ETFs have. So you see, you would not be aware of those things unless you use a tool. You would trade gold and you would expect this, you would trade the GLD ETF and you would expect the same results as if you were trading gold futures. But then your results will be different and you would wonder why. No matter the trading technique you use. So again, it's very important to build the confidence of a trader to know what to expect. And hopefully I made my point, and hopefully I'm helping you to open your eyes to a few things that are very important for success as a trader. So that was your answer, Bojan. Orlando, go to the hourly. I'm sorry I missed it. I don't know which market. If you don't mind to type the symbol and I will go back to the hourly in a minute. TM Garland, thank you. This may help with my 32 gig using. Yes, absolutely. Again, it doesn't matter how powerful our computers are. That's the thing. Were there no other green UFOs? London trader, I'm sorry, I missed your question. If you don't mind to type the symbol and the time frame I was using at the time, I would get it back on the chart and show it to you. Cliff, can you quickly get the calibration I need to drop shortly? Okay, so I think I did. Cliff, not sure if you're still with us, but I believe I did. So you should have your answer. Yes, you can say it this way, Cliff. You can say it this way. Makes sense. Bojan, interesting. Cliff, will the calibration value be consistent across multiple time frames to a given symbol, or should we calibrate every time frame we trade? You know what? I would say. I mean, you could certainly calibrate everything you do. But you also have seen that if I change these settings, so let's go back to, I don't know, which other market can I use? Aussie dollar against Japanese yen. Just pick another market. Okay, so this is the Aussie Japanese yen in a daily time frame. Let's move it to 4-hour charts, for example, 4-hour time frame. So it's loading. So we'll just wait a second, and it's going to be loading. So now I want to show you that there is no need for us to be perfectionist. Even though I am. And the reason why I say that is because if you were to spend a huge amount of time calibrating every time frame, remember, you have seen that I went through time, prior months, years in the past, and you have seen some consistency on the figures, but the figures have never been exactly the same. So what does that tell you? It tells you that really doesn't make sense for you to get too perfectionist at calibration. Does that make sense? So if you were to look at the Aussie Japanese yen and you look at 64.8 at the moment when it comes to probability, and you change to 0.65, it's going to be 63.78. If you go for 0.75, it's going to be 62. So what's the difference? Well, it's not big. And again, next month and the prior month is going to be also slightly different. So I would say my recommendation is just end up with a number you like. The first time you use the tool is just playing a couple of hours, playing around with different markets and different time frames, and go back in time the way I showed you. And the moment you get to a point where you are comfortable and 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 you feel the confidence kick in, and you feel that this type of parameter is adequate for you, well, then you just leave it there forever, or maybe you review it once a year. But I would not suggest to calibrate too many times. Okay, this is more about, remember, calibration is looking for this healthy spot balance with having my stop far enough and having my target close enough, but not too close, right? So that's kind of like what you're doing. So play with it a little bit, and then you decide what you like, and you just leave it there. Um, Anthony, to follow up with Cliff, with a different symbol, need a different calibration to give a certain minimum probability. No, just answer that. London, this data just refers to price going from level to level. I guess we still have to size orders correctly and take into consideration risk. Absolutely. So, for example, so let's say you were planning to take this trade with the Australian dollar, and you tell me, look, my radio 4 is up there. I plan to have an entry, when it hits, this tiny circle inside the UFO. So, of course, if I put this circle, you don't see the thing below, but I'll put it like that. So you still see the little dark color here. So this is where the greatest concentration of orders are. So let's say you plan to enter where the magenta circle is, and then you plan to set your stop somewhere below, right? And then you plan to set your target when you reach the next UFO, but you don't want to be too greedy and hope it's going to get all the way to the darker circle. Maybe you want to just take profit just right where the dotted line is. Okay, let's say that's the case. Well, if that was the case, you would be risking from entry to stop. You would be risking this amount. With this amount, if I was to use a beautiful red color and I was to add my labels and show the net change, so that is, I'm risking 40 pips in that particular case. And in order for me to make my 40 pips, I would be willing to expose myself to a profit of, from here to here, it would be a profit of, let's call it 150. So you are risking 40 pips to make 150. Obviously, probably a trader would be happy with this type of reward to risk ratio. Now, could it be that we have other scenarios? So let me move into, I don't know, what can I use? I'll use some Forex, because at this time of the day, most markets are quiet. Forex are moving a little. So let's move into Aussie US dollar, for example, and let's see what we have here in the Aussie US dollar. And if I don't have what I need, I'll change the time frame. So let's start with the daily, for example. So just because it loads faster. So the daily, I still have a long waiting time here. So what if I look at the 60 minutes for the Aussie? Okay, still pending data from my request before. Yeah. I just want to accelerate the loading process. Here we go. So, well, here it's actually looking nice as well. You got a lot of room between the green and the red, lots of room. So, so you may have a good trade there with this particular UFO. But so let's look at, what if you were looking at the 5 minutes? Well, still good opportunity to take a short and make a profit on the downside. So what if you were, I'm just looking for a bad opportunity, which sometimes is difficult to find. Let me see, 15 minutes, what happens in the 15? Okay, I'm gonna have to look for a different currency. So what about the yen? US dollar yen. I just want to find a bad opportunity, meaning an opportunity where UFOs are too close to each other, right? So maybe the trade would not be worth it. Again, just giving you different ideas and thoughts on how to use it, right? So let's take a look at the yen. Lots of room for movement with the yen. Let's take a look at the 240. 5 minutes. Okay, let's give it a second. It's coming. So this is the answer for you, London trader. So let's all be patient here for a sec. I just clean my cache folder, so my computer needs to reload the whole thing. So I'm just reloading the data. Okay, so this is the daily time frame. Back to the 10-minute time frame now. Should show. Here we go. So yeah, well, it seems that most of the trades that we see, there is a lot of distance between UFO to UFO, so that's a lot of profit margin. Let me keep looking for something that may not be good. We had something earlier. I think it was the Nasdaq. That was not good. Yeah. So for example, here, perfect example. So if it comes into the red UFO, well, that could be a good trade to short, right? It could be a good trade to short. But if you short where this red UFO is, and it's you got 65% probability is going to hit the green. But if you are risking this amount from here to here, right? Let me make it red. If you are risking this amount to make this amount, which is my little green bar here, I'm going to make it green, right? So you are risking more than what you're going to make in this trade. So this trade, if I zoom in, so you are risking, what you see here on the, you're risking, the high of the red bar in order to make the high of the green bar. That's not worth it, even though you got 65% probability. Assuming you took all the trades, all the UFOs in this chart. So probably not a good idea. Now, what about this? What about this? What about it breaks the UFO? So let's say this UFO is traded. Let's say price goes down, and after price goes down, it comes in here and now breaks the UFO, right? So could you maybe do a breakout trade and expect this thing, to continue all the way to the next UFO? Well, yeah, you could do that. You could do that. Why? Because you have all this room, all this room for price to move, because you got room between UFOs, but here you have no room, right? So this is my long answer to your question, London trader. You would still need to take into consideration the risk, okay? Orlando, I have answered your question. Great. Bojan, Jose, do you guys do any live session training in live markets? We have not done that because at the moment, this is just a technology conversation that we're having. So I'm just sharing with you technology. But maybe that's a great suggestion. So maybe we can get organized in ways. Okay. I get opposing additional UFOs. I guess opposing additional UFOs will form as the market moves forwards. Yeah. So this updates real time. So the speed at which the market moves at this time in the day is very slow. So you can see the euro is not doing much. This is a 1 minute time frame. Let me see the Nasdaq or the S&P. Okay, look. So a few minutes ago.
These are the top results.
Interesting. I got my Google Assistant here talking to me. So I'll just leave this chart like that for a minute. So if a new UFO forms in the 1 minute time frame, you'll get to see that happen. Even though at this time of the day, really we have very little, like market movement. So I don't expect anything too pretty to show up on the chart. But hopefully you'll see how this forms real time in front of you. So yeah. Yeah, perfect. So I think I went to the bottom of the list of questions. So that's great. So guys, I think it's your turn. I'm just gonna leave my screen doing what it's doing, and we spent like an hour and a half to go over this little technology discovery and talk about the markets, which we all love. Would you guys, I'm very happy if you guys want to grab the microphone and ask questions, or you rather comment on the chat box. It's anything you prefer, and I'm happy to stay here for longer. I have really no rush. I'm happy to stay here for longer, but I also know that depending on where you're in the world, it's quite late. In Asia, we're starting our day here, but in England, it's very, very late, and even in the US, in the East Coast, it's quite late as well. So whatever you guys say. Anyone would like to grab the microphone? Just click on the microphone icon, and you can either say something or ask a question if you want to. No one? Okay. Is this good or bad? Is this a good thing or is that a bad thing? Got it. Got it. Got it, guys. Yeah, I just want to make sure you guys are not kind of shy or intimidated to use the microphone. I'm really happy to help. Okay, so anything you may need, I'm very very happy. Oh, you look at that. I was looking at my phone and a green UFO just formed, and price came into it. Okay, so now we have 59% probability is gonna move up and hit the red UFO. Okay, so let's see what happens. In any case, while we wait for this to happen, and by the way, we also see in 1 minute. You know what? I'm just gonna wait 1 minute because in 1 minute you will see that UFO go away. So 5 seconds now. So in a few seconds that UFO is gonna go away, even though you will be in the trade. And the reason why, here we go, you see it went away. That's what Orlando was mentioning earlier in the chat box. It went away because it traded very deep, right? So you have a good entry and you still have your 59% probability to reach the opposing zone based on just pure stats. But at the same time, if I was to be trading that opportunity, I would be very aggressive with my stop now and moving my stop to break even and stuff because even though you had unfilled orders that pushed this thing up, and we all see it's going up. At the same time, many of those orders got filled, and if it was to come back down, you may not get the push again. So that would be an indication for you to move your stop. Okay, and that could be a way on how to use that, unless you prefer to, hey, I don't care. I don't want my UFOs to go away. I want to see everything available. So you would come in here in your hide hid UFOs, and now when you add it, you can still see it. Okay, you can still see it. Okay, and we also have one here, which is reacting. The market is reacting to it, even though that one was considered to not to be too good anymore. So it was eliminated by the algo. But again, if you want to have full visibility, that's what you would do, right? And now, so this thing is now moving towards the target, and hopefully it'll get there. But in any case, if I was trading that opportunity, I would have moved my stop to break even. Why? Because the UFO disappeared. Okay. So got it. I'm seeing you in the chat box. So couple of notes here, couple of notes, and I will conclude this session very quickly here. So I'll come back to the chart right now and we see what's the end result. Out of curiosity, I guess we're all curious. But first of all, how do you get access to the app? So two things. First, we have a website called www.tradewithufos.com. Tradewithufos.com. All of you know that because you clicked on the Get Together button to be here together today. So you know that. But what I want to make you aware here is one thing that is very important. You have a guide section. If you click on the guide section, you'll be able, here it says that it's highly recommended that you explore the user guide before you use our app. Highly recommended. I know sometimes it's a little boring to read manuals, but maybe you love it. Maybe you love to read manuals. So if you love to reading manuals, you have the 9.5 version and the 10.0 version of TradeStation manuals here. So please download it. It's going to be a PDF that looks like that. It's 20 pages. It's worth it to read. Okay, so I would really encourage you to do that. Okay, now you may not love reading manuals. Okay, so to make your life a little more easy, so what if reading manuals is not for you? So if reading manuals is not for you, you have a few videos below. Those are YouTube videos that you can just watch. So legal considerations. What does this app do? Okay, so this one is 4 minutes. The second one is 4 minutes and 20 seconds. The third one is ready to access and use the app. That's 11 minutes. The next one is components and settings. That's 9 minutes and a half, almost 10 minutes. And then finally calibrating, which is 7 minutes and a half. Okay, so you know, just just watch those videos. I would recommend you or read the manuals because it would really help you to understand much better, how this works. This is a flying saucer, etc., and how to use the tool. Okay, so that's one thing. Now, once you decide you want to use the tool, if you decide you want to use the tool, you can either subscribe to it by clicking on subscribe, and here you have access to a free trial. You just click try now for free. If you click here, is going to give you access to a TradeStation page, which is the TradeStation App Store. So you can either access the TradeStation page by clicking on subscribe on the top of the menu of our page, okay? And then you click try now for free. Or you can just type the TradeStation URL, which I am posting now on the chat box. So that will bring you into the TradeStation App Store. So you can click on your free trial, and you have access during 8 days. It will give you full access to the tool, and then if you like it, you can subscribe further. Um, that's actually quite simple. Okay, of course, it does require an account with TradeStation. I remember we talked about that at the beginning. So if you didn't have an account with TradeStation, okay, so here it says to be able to use the app, you first need access to TradeStation. So yes, you have it. So you just subscribe. I just told you. What if you don't have it? Well, if you don't have it, you have two choices. Choice number one, use TradeStation Analytics. This is TradeStation software without an account. Now, TradeStation will charge you $249.99 a month to do that. So again, you decide, but in my mind, it's much better to use a full execution version of TradeStation. So you set up an account with TradeStation, and remember, TradeStation doesn't charge, for if you get into TradeStation, TradeStation.com. So TradeStation doesn't charge for the software anymore. And where is it? I think it's probably pricing. Where are you, TradeStation? I mean, probably you know this, but just in case. So pricing. So no software fees, right? So no software fee, free market real data. It's not every market, but many markets. Okay, could be stocks, ATFs, but also options. Same story. No software fees, free real-time data for options. Actually, I think they give access for all options. For futures, they give you free market data as well, but not all futures contracts. I believe it's the CME only, but I'm not sure. Talk to them. And also you have it's not here in the list, but you also have Forex, which is free of data. So you can have the tool. Of course, you would need to open an account and put some money in it, even though you may not plan to trade using TradeStation, if that was your case, but that would save you that money, which I think it's, again, it could be a nice one to have, right? So anyway, so guys, so those the better stats of the calibration equate to a better entry point with my traditional span? Yes, I would say so. Not only a more precise entry point, but also an entry point where you know what to expect from it. So it certainly can help you. How much money? It's right here in front of you. It's $89 a month, the subscription. And again, you can do the free trial, or if that's a problem to you, there is in our website there is also a samples section. When you click in samples, if you read this carefully, you will learn that keep in mind that AutoUFOs can be accessed for free in exchange for trade examples. So we have something called the samplers program, which means that if you are willing to share your trades with us, so we can use your trades as examples for other people out there in the community of traders worldwide, and they can see your trade examples, and that will get them and help them to understand better how to use the app and the power of the app. So then you can have access to this tool for free, and then you don't need to pay the $89 of the subscription. Okay, but that of course involves certain level of commitment where you would be posting trades in a regular basis using this form, where you would type your name. You could make yourself anonymous if you want to. You can hide your name. It doesn't need to be public, but you will need to, in a regular basis, provide trade. Could be CFDs, equity, stocks, futures, options, you name it, hedging, long term, short term, you name it. Style of trading could be fundamentals, could be only UFOs. That's my favorite, but it could be pair trading, trend continuation, trend reversal, you name it. And you would just give a little explanation, and these would show in our social media. Okay, um, so that way you help us, and that way the predictive helps you. Okay, so that's the goal. Okay, so how is it going out there, guys? Oh, the trade station, it's for free. The trade station is for free as long as you. Oh, I guess you're asking how much to deposit. So let me see. Um, I am not fully sure. I believe it's if you do stocks and ETF, if you open a stock account, I believe that will require you $500. I believe that's what it is. Um, I believe if it's futures, it's probably going to be more. Um, but you could certainly have a stock account. So you tie up $500, which probably is the minimum, and then you activate your futures data feed. And I guess they would give you access to futures or forex if you want the forex, for example. So you will want to talk to TradeStation to find out more. Okay, I think what I said is correct, but you will want to double check with them. So got it. Perfect. Thank you, Bojan. So anyway, guys, hey, a pleasure joining all of you out there. Love trading. So love spending time talking about trading, and love technology. So love spending time talking about technology, and today we did both. So I'm delighted. Hopefully you guys had fun. How was the session, guys? Was it useful to you guys to get together today? Very. Thank you, guys. Thank you so much. One last thought. Two last thoughts, if that's okay. Please shoot me an email with any thought you may have about the tool, about assistance you may need on how to use it. Anything you would like to share with me. Shoot an email. The email I'm just gonna. I mean, you can either use the reach form on our website. You can either type directly to reach at tradewithufos.com. Tradewithufos.com. Here we go. I got it right on the chat box. So you can shoot an email there and share any thoughts you may have. They would be welcome. What else? We are in the process of getting organized to do more and more support. So expect more sessions like this. And again, looking forward to receive your emails with suggestions and stuff. So we'll be listening to you and implementing what you guys need. So speak up, okay? Don't be shy. Share whatever you have to share, and we'll be happy to embrace it. And we'll certainly keep you posted on whatever actions, whatever other get-together sessions that we do. You will keep you posted. So take a look at our website in a regular basis, because it'll be updated on the website, but we'll also send an email whenever we organize anything else. Okay, guys. So we'll see that. Okay, and yeah, it did reach the opposing UFO. That was the end result. So nice. Nice way to conclude the session. So you guys take care. Super pleasure having spent this time with you here, and talk to you soon, guys. Keep up the good work. Trading is amazing, but let's be less human. Let's be more alien, and keep those emotions under control, and that confidence. Okay, the key of succeeding at trading is to sounds weird, sounds funny, but the less human we are, the better traders we become. So my alien friends, you guys take care. Talk to you soon. Bye bye.